The U.S. election is just days away, with the global economy waiting patiently to see who will take the reins. Is the downbeat October's jobs report a one-off or the start of a trend? Joining me now, J.P. Morgan Asset Management's chief global strategist and author of the J.P. Morgan Guide to the Markets, a must-read on Wall Street, David Kelly. David, thanks for coming by the studio.
Glad to be here.
So let's start big picture, 30,000 feet. What's your view of the economy? Is inflation defeated? Recession on the horizon? What do you think?
No, I think the economy is very healthy. I think it is. It's been on this soft landing path for a long time. I think what's going on is the expansion is continuing, and it's sort of broadening a bit too. We're seeing good signs. We've had 18 straight months now in which wages have gone up by more than CPI inflation. So this is broadening out. It's not just the richest households are doing better now. This is a broader economic expansion.
One little notice thing is that productivity, which really was kind of doing nothing for many years, has picked up. Is that an actual trend? And if so, what's behind it?
No, it is a trend, and it's very interesting. I mean, if you look at the output per worker in the United States, that grew by about 1.3% per year for the first 20 years of this century. And in the last 5 years, it's grown by about 2.3%. And actually, in the last year, it grew by 2.6%. Now, productivity is a wonderful thing for markets because it pushes up corporate profits, it allows for higher real wages, and it also holds down inflation. So I think that's a big part of why the economy is performing well.
What's changed?
Well, I think it starts actually from having nobody left to hire. You know, to me, productivity is just another word for having no one left to hire. Because what happens, and you can see this in the real world, is you've got people doing the jobs of 2 or 3 people. You can't hire somebody. You want to hire somebody competent, you can't. So they grumble, but they get the job done. And you're always looking for, is there something we can do more efficient? Is there something stupid we're doing we can avoid? And I think that constant treating labor as a scarce resource is a great way of improving productivity.
Not always great for the dinner time, but otherwise good.
No.
So far, you've painted a fairly rosy picture,
Yeah.
and we did have a good consumer sentiment survey recently. But all that said, a lot of people feel kind of crummy about the economy right now. Why the disparity?
Well, I think people are still getting over the big increase in prices that we saw during the pandemic. And the problem is, since 2019, wages have gone up about 27%, and prices have gone up 23%. But if your wages go up, you say that's my hard work and my effort, and boy, do I deserve it. If the inflation rate, if prices go up that much, you say this is a lousy government, this is a lousy economy, and if it wasn't for this inflation, I'd be doing so much better. Of course, it's the same process that's been pushing both.
Sure.
But I think people really want to see prices come down, and that's just not going to happen.
And also, you've pointed out an interesting dynamic, which is that while the economy is measured in dollars, which rich people have a lot more of, a consumer sentiment survey is one man, one vote.
Well, that's right. And while I do see a broadening and expansion, this is relatively recent. I mean, the first few years of this decade, it was really about richer households doing better. And that'll push spending, because richer households have more money to spend. But a lot of people in the bottom half of the income distribution really were getting squeezed.
Okay, we have an election, as everyone in the country knows, on Tuesday. What do you see as the most important economic issue?
Well, I think it's how people feel about the economy and how they feel about their own economy. And I think that's... to some extent, it's tricky because people are getting all this news about why they need to be scared about the economy. I mean, from both sides, you need to be scared, you need to be angry. That's how people get, stations get people to watch. So, but I think it's about jobs and it's about inflation, as it usually is. And the question is, we are seeing in the data, we're seeing this broadening economic expansion. But has that broadened enough so that people actually feel at this point? And I guess we'll get one answer to that on Tuesday.
Absolutely. From a policy perspective, what's most important from your
Well, I think whether we end up with divided government or single-party government. Now, at this stage, it looks very unlikely that we'd get single-party Democratic government, but we could get single-party Republican government. And if you look at it from that perspective, divided government is going to be pretty much more of the same. If you get single-party Republican government, you could get a lot of fiscal stimulus, bigger deficits, maybe bigger growth in the short run, but also perhaps a trade war. And so all of that will tend to push up inflation, tend to push up interest rates. So I think you get a higher path in interest rates under a Republican sweep than you would under divided government.
Right. We're out of time, but in a sentence, can you tell us your best investment idea right now?
Diversify, because things have gotten done really well, but you want to spread it out in case something eventually goes wrong.
In the lost decade, had you owned international stocks, you did a lot better. Right now, it's hard to buy those things, but you need to.
Well, that's right, because something could go wrong in the United States, and you want to be diversified around the world.
Alrighty, David Kelly, thank you so much for coming by.
Anytime.